Yeah, well, despite those concerns, US stocks ended January on a high as new Labor Department data shows wage growth slowing, and it's another sign of cooling inflation ahead of Wednesday's Fed decision. Our next guest says she's planning for further market volatility by maintaining a sizable allocation to alternatives. Banrion Capital Management President and CEO Shana Sissel joins us now. Shana, thanks for joining us again. So we saw the major markets in the US pushing higher, risk on ahead of the Fed decision, but what's the risk here? Because we've seen this movie before, haven't we? Jay Powell comes out, gives everybody a reality check. Are you anticipating a potential correction?
Quite frankly, yes. I'm still not entirely sure what Fed Chairman Powell is going to do. This is one of the few times where I don't think they've actually telegraphed so well what their intentions are for this particular rate cycle. But I will say that it's not a good sign that the market has sort of been raging into this meeting. Chairman Powell has the ability to take the punch bowl away, and I think that he will be more inclined to be hawkish given how strong the market has been and given how strong the economy has been, how resilient it has been. And so I'm leaning a little more towards 50 basis points, but I think the market would be relieved if it was a 25 basis point hike. And there are some members of the Fed that are becoming more dovish and have come out and communicated that they would like to see a 25 basis point move. But I just think the strength of the market makes it more likely than not that Chairman Powell will be inclined to raise 50 basis points.
Well, that is a big call. Most of the market does seem to be anticipating 25, but if you're expecting 50, how are you positioning ahead of this decision?
Again, I just want to say I'm not necessarily expecting 50, but I also was not expecting such a strong January. So I'm not really changing my positioning one way or another. I might become a little more bullish in my positioning and add a little more to my equity positions if they only raise 25. But I continue to think that there is going to be volatility in the market. And so, as you mentioned, I do position quite heavily with some alternative product to hedge some of the risk of the volatility of the market.
So, Shana, I wanted to go there because if you look at the MOVE index, we're down at multi-month lows, and the same with the VIX, really. We're back at levels that we last saw several months ago. Are we suddenly going to get bouts of volatility, or where does this come in?
Well, I think we've had a very good January. If you recall, December was quite difficult. And we've had some strong economic numbers, particularly as it pertains to the employment markets here in the U.S. So I think that's helped with the stability of the market. But I think the volatility is going to come from the uncertainty of the Fed. You know, this is the first time in probably 3 years where I am not completely certain I know what the Fed is going to do. In the last 3 years, they have been very transparent going into these meetings on what they were going to do. And if you look at the notes from their meetings, there's not much difference from meeting to meeting for the last 3 years until recently. And with that kind of uncertainty on the greater monetary policy in the U.S. and abroad, I think that means that you can expect volatility to increase.
So, Shana, you mentioned alternatives there, but you're also a little interested in tech. You say that the recent pockets of weakness aren't deterring you from some areas of tech. Explain.
I know it's completely contradicting for me to be saying I think it's going to be a volatile market and I have defensive positionings with alternatives, but then I'm also looking at tech. Tech's had a rough run, and I don't think necessarily that their earnings are going to be that much stronger or things are going to get that much better. But I do think the longer term outlook for technology stocks is positive. And we're giving an opportunity here, almost a once in a lifetime, if you think about it. The last time I can remember tech being this cheap was financial crisis time, to get into these stocks at very, very attractive multiples. So a name like Apple in particular is a name that's trading near its lows. If it got under 130 again, I would be a buyer. And some of the semi stocks, which I think have long-term tailwinds to their businesses, are getting cheaper and cheaper every day. So NVIDIA is a name that I've followed for my entire career. I've always been a fan of, but it's traded at a ridiculous multiple for the last 5 years or so. But that's a name I would buy on weakness. And then a name like Marvell Technologies, another semiconductor name that again has some long-term business tailwinds, would be a name I would buy on weakness as it's becoming more and more attractive on a multiple basis.
Well, Shana, always a pleasure to speak with you. Looking forward to seeing what the Fed decides tomorrow. Banrion Capital Management President and CEO Shana Sissel there with us from Chicago. Let's get over now to Sue Keenan. She's